A lot of people still borrow money from their friends and family. In fact, that is the bulk. According to the Financial Access Survey of 2019, majority of people still get personal debt from their friends and families. But there's a new source of debt, of personal debt, which is the digital lenders. Mobile money is very prevalent now. In fact, mobile technology has raised financial inclusion in Kenya to about 82 or so %. And that means that the bulk of the population has access to credit from digital lenders through either a mobile app like Tala or mobile banking like M-Shwari. But there are also other traditional sources of loans like the banks, SACCOs, chamas. So there are a variety of sources from which people can get loans. But a lot of people are now using the mobile apps to get more people are using the mobile apps to get loans because of their ease of access and convenience. I mean, traditionally, if you needed a loan, you needed to apply to a bank, either go there physically, fill a form, and then wait for several days before you can know your fate, whether the loan has been approved or not. And in some cases, you needed to provide collateral. But today, all you need is your mobile phone, and just with a few clicks of a button, you can get a loan. The lenders are taking a risk in giving borrowers money that is not secured. It's secured basically based on non-traditional kind of collateral, like the borrower's credit history, their transaction history. The challenge is the interest rate that is charged on those loans. It is pretty high. And what is happening is that a lot of people, it's causing a lot of people, especially the youth, to really suffocate in debt. And we can see, the telltale signs are there. Because you'll see a lot of people are unable to meet their daily expenses as they divert their income to repaying debt. There are people who are borrowing money from one mobile app to repay the loan from another mobile app. Some people basically change their lifestyle. They stop taking calls from their lenders. They change SIM cards, they change mobile numbers, or they just simply go underground because they are unable to pay their loan, and therefore they don't know what to do. Other people just go into depression. If you're in suffocating debt, one of the first things that you need to do is to conduct a lifestyle audit. And this needs to be very, very honest. You have to list down all your expenses. Yeah? And list down all the loans. List down all your sources of income. And then determine what are you able to repay. If you have multiple loans, you can consider, is it possible to consolidate your loans? For instance, you can take one big loan that has a lower interest rate and repay some of the smaller loans. What that will do for you is that it will reduce the stress levels because you're dealing with one lender as opposed to dealing with very many lenders with very many phone calls, very many text messages, and just basically it reduces that level of pressure. The other thing you need to do is that you need to start budgeting for your income and expenses. Because as we know, failing to plan is planning to fail. If you're not budgeting for your income and expenses, it means that you just don't know how much comes in and you're not able to prioritize your expenses. And you are very prone, therefore, to impulse buying. You see something nice, you decide you want to buy. And since you don't have money and you can get a loan, you simply go to your phone and you get a loan from a digital lender without thinking about the implications. in terms of the interest that you need to repay and where you're going to get the money to repay. So if you start budgeting, then it helps you to see the amount of income and what expenses are reasonable for you to incur against that income. And if you have a loan, how you can structure your repayments in a reasonable way so that it does not strain your other expenses. And of course, something else that you need to start doing to get out of this situation is to start recording your expenses. You must start keeping track of all your expenses. So if you have a budget, then you need to track your expenses so that you are able to, on a periodic basis, and say on a monthly basis, if your income is monthly, on a monthly basis, you can go to your data and analyze your expenses against your budget. Did you overspend in any of the budgeted items, or did you save some money in some areas that you can now reserve or direct to an investment? If you're really stuck and you feel that you are unable to do this by yourself, you can consult a financial expert and they can guide you. I mean, it may come at a fee, but they can guide you in terms of how you need to structure, how you need to plan your finances so that you can get out of the debt cycle. Because a lot of people are in a debt cycle. They're simply borrowing, taking one loan to repay another. And because the interest rates are so high, even when they take a second loan to repay the first one, the second loan is not able to fully pay the first one because of the interest. And therefore, they just get into a cycle, and at the end of the day, they default. So what happens when they default? They get listed in CRB. And that's not a situation that you want to be in. Some of the reasons are avoidable, others are unavoidable. And let's just first address the unavoidable reasons why people get into debt. Maybe you have a sick relative, you have exhausted medical cover, illness has been prolonged, and you also even sold family property, and now you have no other option but to resort to debt. That you can say is sort of unavoidable. And for some people, loss of a job, especially when unemployment is extended for a long period of time, because ideally, you should have some reserve funds when you are employed and you have a steady income. You should ideally have an emergency fund that can cover your expenses for about 3 to 6 months. But if after those 6 months you still don't have a source of income, then it can become a challenge. Although in a different show, we will talk about how you can, address the income side of things to ensure that you're actually able to meet your expenses. But what are the avoidable causes of debt? A lot of these are really lifestyle oriented. Why? Because you find that people are just the issues we talked about. If someone is not budgeting, it means that they are prone to impromptu expenditures. If someone is not keeping track of their expenses, they just can't tell you where the money goes. In fact, this is a very popular common statement where you hear someone says, I don't know where the money went. I have this amount of money, but I just can't tell you where it went. And when you're not tracking your expenses, then in all likelihood, the money runs out before the month ends. And so that's really a lifestyle issue. Another issue, and which is really a big factor, is where people are just trying to keep up with the Joneses. You want to live a certain lifestyle that your income cannot meet. You want to live in a certain neighborhood, you want to drive a certain car. And what you need to ask yourself is, do I need to live where I'm living today? Or can I live in a different neighborhood that is still a good neighborhood but cheaper? Do I need to drive to work every day alone, or can I use public means? And so some of this reason, I mean, if you're going to take a loan because you want to fuel your car to get to work and you're the only one in that car, then to me that is a very unreasonable expense. consider using public means to lower your transport cost and not have to take a loan for that.